Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is David Donovan. He's Executive Vice President of Financial Services at Publicis Sapient. We're going to talk about digitized platforms, and if you're not digital, you're not going to survive. David, it's great to have you with us on Trade Talks. Thanks so much for joining me.
Thank you, Jill. Thank you for taking the time to have me on your show.
All right, and let's think about this. Digital outperforms, and you have a couple of examples here, and clearly we have seen that in our own personal and professional environments.
Yeah, I think that the most important thing as we look at the 21st century is that the enterprises that are going to master large-scale software delivery are going to be are going to actually win in the 21st century. And these are examples, so these are specific examples where you've seen companies that are digital, from front to back, and have essentially taken advantage of being of business agility. And when you think about business agility, it's really looking at emerging customer behaviors, different trends that are happening, and being able to pivot and being able to take advantage of those customer changes, those customer behavior changes. So when we look at some of the specific examples of where you've seen business agility, and some of these are obvious. Apple Computer, for example. Apple only started making watches 5 years ago. And already they're the biggest watchmaker in the world. And if you think about that, Rolex, Timex, Cartier, they've been in the business for over 100 years. And within 5 years, Apple has surpassed them as the biggest watchmaker in the world. The other example we talk about is Amazon. And Amazon is certainly probably the best example of leveraging digital technology to their advantage and allowing them to get into pretty much any business they want. Right now, I wanted to use this example because I thought it was appropriate based off of the situation we're in. Nowadays, you can actually, where everybody's sequestered, you can actually order your groceries from an Alexa and have them delivered by Whole Foods to your door. So it just gives you, just another example of where creating these platforms that are underpinned by digital technology is helping people even in times of stress like we have with COVID. And then the last example, this talks more about the leverage that you can achieve with digital technology. I think in your show is all about trader talks, and a lot of times there's probably talk about financial leverage and how banks or hedge funds or asset managers use financial leverage. I'd argue that technology leverage, digital leverage, is the best leverage you could possibly deploy to really create to create value and for a lot less risk. And here's a perfect example: Tesla. Tesla right now is a car company, but it's really a technology company, and it's amazing that they have a market cap that's bigger than GM and Ford combined. And that's not to say anything bad about GM and Ford. GM and Ford make money every day, but Tesla, by leveraging technology, by leveraging digital technology, is able to create greater value in a industry like cars.
Yeah, and if we look specifically at the financial industry, and you have two really good examples here, older players such as Goldman Sachs and Visa, they are embracing the digital platforms as well. They understand that it has to be part of the ecosystem.
Yeah, I like what Goldman is doing. And just to set this scene, as you know, we're in a period of very low interest rates with the treasury markets. But ironically, credit card rates are still very high. So credit card rates, the rates that consumers are charged for using credit cards are disproportionately high to the treasury rates. And you might want to ask the question, why is that? And the reason is because they have to pay for their marketing departments. So when you look at the cost of acquiring one customer in the credit card business, for a legacy bank, it costs about $1,500 to acquire one customer. Where a fintech company, say somebody like Square, that same customer costs $20. Again, this is that leverage point that I brought up around technology. So I look at like what Goldman's doing. I really think they have a tremendous strategy. You think about they're creating technology. They're creating these API connections, and instead of trying to worry about customer acquisition, they're trying to get involved in these ecosystems where they can partner with really large user bases. So, for example, they partner with Apple Computer, and they get they obviously are exposed now to all of Apple's users, whether the people that buy iPhones and AirBuds and computers. So they now all of a sudden those customers become Goldman's customers. And the same thing on the small business side. They're partnering with Amazon to help them with small business loans for all of their third-party providers. Now all those customers on Amazon become Goldman's customers. So it's just a great way of creating this idea of being in an ecosystem, a platform, is in my mind that's going to be the business model of the future. And a similar example in the next slide with Visa. Visa bought a fintech company called Plaid for $5.3 billion, and now Plaid has created this platform called Plaid Exchange. And really, what Plaid Exchange is it's going to be an exchange, an open-based, API-based exchange. And what it's going to do is it's going to create all the transparency and security and standards you'll need, and it will still give customers permission to use their data where appropriate. But what it will do is it will give all of Visa's customers or any customers that want to get on the Plaid Exchange access to over 3,000 fintech apps. So, for example, if you're a consumer and you have multiple accounts across different banks and you wanted to get an understanding holistically of your financial health, but had in the past you had no way of doing that because banks, especially legacy banks, aren't set up to do that. But now with the Plaid Exchange can actually aggregate all of your accounts, all of your financial data. Of course, as long as you're willing to give the permission, and you always have permission to opt in and out of any of those initiatives. But they're basically allowed to aggregate all of your data and give you a really clear picture of your financial health, and certainly give you optionality because of the fact that you have the ability to plug into all these different fintech apps, and it's open source, so fintech apps can continue to grow the platform. So again, both of these examples are examples of what I think is where the financial services world is moving to, which is this customer-centric business model where your business really has to pivot around customer behavior and around creating immediate value for customers.
All right, David, let's switch gears a bit and talk about the COVID-19 response and what Publicis Sapient did specifically as a company.
So Publicis Sapient has been, first of all, Publicis Sapient has, our whole ethos is based off of digital, and that you have to be digital to survive. So what COVID has done is created urgency into that need now to be digital. So it's ironic that it took a pandemic to do this, but what's interesting is when you look at some of these banks that their models were very proximate and they were very branch denominated, now they all of a sudden have to stand up solutions for their clients within weeks because they were caught flat-footed. But what Publicis Sapient has been doing has been creating solutions for quite a long time around digital, around creating value, leveraging digital. So some of the things we have a bunch of solutions across our verticals, whether it be rationalizing the call center or creating solutions around being able to, through data, being able to detect whether clients are going to default or not. But specifically within financial services, which is my area, one of the things I'm most proud about, we work with all the major banks and all the major asset managers in the world. So when the lockdown happened, we were able to convert all of our clients, and we have large engagements, like 200 to 500 people engagements supporting our clients. We were able to convert all of our clients virtually within 2 days of the lockdown. And we didn't miss a beat on any of our deliverables. So I thought that was really impressive. So this slide here is a use case around one of our larger clients, a major global investment bank. We're running over 40 projects with this client across multiple geographies. So think about it. You have to manage time, different time zones, different geographies, different stakeholders, because the way we work co-located. So whether we're co-located physically or whether we're co-located virtually, we're co-located. And we were able to essentially, nothing changed with when we converted to virtual. In fact, our what we call velocity, which I can go into, our velocity actually went up. So we measure our ability to deliver features and capabilities and enhancements to our clients' products and services. That's what we call velocity, the ability to measure how many features we're able to add to that service or product within a specific time frame, or what we call a sprint. We were able to increase our velocity when we went virtual with our clients. So we were doing daily stand-ups with our clients. We were leveraging all the technology like Symphony and Zoom and Microsoft Teams, and we were still using all the same techniques that we would do if we were in person, only we were using the technology, stuff like pair programming and Jira, which are development terms. But as I was saying, the quality of our code was at par or better, and our ability to deliver value went up. So I thought, so from a Publicis Sapient perspective, it was a tremendous accomplishment for our teams, and our clients were very happy. In fact, we were actually faster than our clients, because our clients sometimes had logistical issues that they had to overcome, and we were able to work with them, and our logistics were pretty solid. So that was one of these are some of the impressive activities that that we're doing during this time.
Yeah, it really is quite remarkable just how quickly you were able to pivot and then in turn help your largest clients pivot. David, thank you so much for joining us on Trade Talks.
Thank you, Jill. Have a great day.
Thank you. You too. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.